Okay, so the session is going to be recorded. Okay, guys, so let's go for the questions, because for this chapter, financial instruments, we did not yet cover, let's say, all the questions related to that topic. So for today's session, the objective is simple, that we cover all the questions that were not covered before, and of course, start working on a new chapter related to provisions and events after the reporting period. All right, let's start by, okay, I think that the first question we did it before, but we did it from the perspective from the asset or financial assets. And I would like that I go back again to the question one, because I will be tackling it from the perspective of the financial liability, not the financial assets. Okay? Shall we please read the question and then we start working on it? I say that cross issue with $200,000 $10 redeemable 5% preference shares at par on April 1st, 20x7. Issue cost amounted to $193,000. The effective rate of interest is 10%. The preference shares are measured at amortized cost. Okay, everything is there. What is the carrying amount of the preference shares at March 1st, 8? When I say March 31st, 20x8, I'm talking just about the last or the end of the year, because the year is counted from April 1st to March 31st, okay? But we're going to tackle this from the perspective of the financial liability. All right. Let's go and let's understand what is happening. So from the perspective of the financial liability, when exactly the date of the issuance? I said that the issuance, it's on April 1st, okay? And just 1 year later, okay, I say March, I say that this is the reporting date. We're going to talk about how the financial liability will be presented on March 31st, okay? I say that, in other words, we're asked about the carrying amount. Okay, what is it? Okay, let's go back. Which method are we using here? Is the amortized cost, right? Okay, the amortized cost. Normally, we have to work on that table with respect to the beginning balance, the finance cost, the coupon, and also the ending balance. Okay, let's go and let's work on it. Okay, we have a first column in which we talk about beginning balance. Of course, guys, we're working on this, of course, for 2020x8, all right, because that's what we need, okay, the end of 20x8, okay, March 31st, beginning balance, we have the interest expense or the finance cost, and we have the coupon, and finally we have the ending balance. All right, what is the beginning balance that I have to start with? In other words, the date of issuance. Normally we have to debit cash and we credit financial liability. But the question is for which amount? So what is the amount that we have to debit the cash with and credit financial liability with? Of course, the mic is yours now, if you have any comment. Okay, we're asking about the date of issuance, of course, the date of issuance from the issuer perspective. It's a financial liability. What is the amount that you're going to debit with cash and credit with financial liability? Think about it.
Is 200 multiplied by $10, so 2 million. The issue costs are not included because كان جينا نخدموا بالperspective نتاع الانفستور أنا حاطينهم من هنا from the perspective of the issuer. بس هو ما يخلصهمش يعني.
In other words, Serene, the issuance cost, and thank you for that, the issuance of this financial liability is costing the issuer 193 is not included. Okay. Can I get back to part of the lecture? Because I would like to, of course, to double check with you something. Do you see the initial measurement of the financial asset and the financial liability, this subsection 2.1? Okay. We said that most of the financial instruments are initially measured at fair value plus minus any transaction cost. What do you mean plus minus any transaction cost? So you can increase the cost or you can decrease the cost. You add it to the asset because if you're taking this financial cost from the perspective of the investor is talking about the financial assets. So in case we do have some costs, we're gonna be adding this to the asset. But you see that deduct from liabilities. Would you please pay attention to this? In case we do have issuance cost, the issuance cost should be subtracted from the financial liability balance. So do we have some issuance costs? Obviously, yes. You have 193. And because we are taking the perspective, or we are talking from the perspective of the issuer, so it's a financial liability. And if it is financial liability, it's not 2 million, but it's going to be 2 million minus 193. So in other words, the beginning balance that you have to work on is the initial recognition. It's going to be 200,000. This is the number of debentures times $10, okay, minus 193,000. Because the standard is clear on that. It's stating this particularly for the financial assets. You add the cost to the financial asset. In case we do have cost incurred by, let's say, the issuer, you're going to deduct this from the liability. Guys, is it clear why I'm asking the question?
Yes.
البرسبكتيف معناتها متاع الإيشور نقصوا الترانزاكشن كوست.
Exactly. معناتها in case the issuer is incurring some costs معناتها باش يتحمل بعض التكاليف ها. So obviously هذول باش ينقصوا من financial liability. It's not going to be counted as liability obviously.
أما كان في الانفستور معناها
From the investor you're gonna be adding this to the cost or the assets cost. That's why تلقى add to assets and deduct from liability. معناتها add to asset is the perspective of the investor, we deduct from the liability is the perspective of the issuer.
هذه في الامورتايزد وفي الكومبريهنسيف انكم ما كان جاي عنا fair value through profit and loss ما نزيدوش transaction.
Absolutely right. And that's why in the exactly, and good job on that. The exceptions are assets or liability held at fair value through profit and loss. Don't forget that, okay, regardless the perspective. Are you taking the perspective of the investor or the perspective of the issuer? In case you opt for the fair value through profit and loss, these are recorded as fair value excluded transaction cost and movements, of course, is passing to the statement of profit or loss. That's correct. So let's do the count. Okay, let me use the calculator. So we have 2 million minus 193,000. So it's 108 or 1,807,000. Okay, so we're going to work on this, saving the, let's say, with key. So the beginning balance. So it's 100 or 1,807,000. Okay, let's say 1,807 to save, let's say, the zeros. Finance cost. How it is computed, the finance cost? Of course, you have to remember the effective interest rate. Okay, what is the effective interest rate? In this example, is 10%.
10%.
And the coupon rate is 5%. Okay, let's remember this. 1,807 times 10%. So let's say 181. Okay, the coupon, it's going to be 2 million times 5%. So it's 100. So what should be the ending balance? As you know, guys, as we covered this before, is the beginning balance plus the finance cost, 181, minus the coupon, which is 100. So the ending balance is 1,888. Okay, and when you say ending balance, of course, the beginning balance is April 1st, and the ending balance is March 31st, 20x8. And this is normally the question, because the question is, what is the carrying amount of the preference shares at the 31st of March 20x8? So the correct answer should be...
Sir?
Yes.
I have a question. Just
Please.
في الفاينانس cost مش هي الeffective rate multiplied by the beginning balance هي 10% من 1,807 normally مش في 181.
هو just I rounded to the nearest decimal معناتها I rounded to the nearest dollar معناتها 1,807 times 0.1 مش نلقى هيك 180.7. So هيك علاش I rounded to the nearest dollar.
Okay. Thank you.
Yes, you're welcome. Of course, if you would like it with all the precisions, obviously, yeah, I have to write it with decimals. But it's going to be this correct answer, right? Finally, is approximately 1,888,000. Okay, this is the answer to the first question. Make sense?
Yes, sir.
So we cover this question from two perspectives, from the issuer perspective, on which we talk about the financial liability, and also the investor perspective, the financial assets. Two different approaches and two different results. And of course, we have to be careful on which perspective we're taking this.
Sir, I have one more question.
Please.
Monsieur, في الجورنال entry يعني we debit cash على ال 1,807,000 مش على 2 million يعني هو غير المأخذ.
Yes, absolutely right. The initial measurement, you're talking about this part?
Yes.
So finally, you're going to debit cash with 1,807,000, and you credit the financial liability for 1,807.
Okay. Thank you.
You're welcome. In other words, this amount is netted, is net. That's the cash that finally we got from that liability. I think that for the second question, we did this in class. I got back to the question one simply because the question one, we have another perspective. Okay, now we move to this third question. Now, of course, guys, if you have any question, please let me know. In case one of the students is not able to talk, of course, you do have or facing an issue in the mic, of course, you can write the question on the chat. And of course, I will be thankful to the classmates to inform me that we have a question on the chat. Okay, let's go to the third question. On the 1st of October 2023, Bertrand issued a 10 million convertible loan notes with which carry a nominal interest or coupon rate of 5% per year. The loan notes are redeemable on the 30th of September 2026. So issuance, we're talking about issuance on the 1st of October and the redemption on the 30th of September. So we're counting 4 years, 3, 4, 5, and 6. So the redemption is expected to be at par. At par, it means that at 10 million. Or can be exchanged for equity shares. So we have here the option to redeem the bonds or the loan, I'm sorry, the loan notes, or finally convert these loan notes into equity shares. A similar loan note without the conversion option would have required Bertrand to pay an interest rate of 8%. The present value of $1 receivable at the end of each year based on discount rates of 5% and 8% can be taken as follows. You have the present value or the discount factor, right? The present value of the discount factor. How would the convertible loan appear in Bertrand's statements of financial position on initial recognition on the 1st of October 2023? So the question is on the first, okay, the initial recognition only. We don't need that we tackle, let's say, the rest. All right, what do we have in this question? What is the solution strategy to answer this question? First thing first, we have to classify this financial asset or this financial liability, I'm sorry, into, let's say, one of the 3 methods that you know. Okay. Is it a financial asset? Is it a financial liability? Is it an equity instrument?
Financial liabilities, magic, it can be exchanged for equity shares.
That's why these financial instruments, we call it in the lecture what? So I go back to the lecture.
Compound instruments.
Thank you so much. It's the compound instruments. Every time you have the option to convert one of the liabilities into equity, of course, it's a compound instrument. So what shall we do for the compound instruments?
We must calculate the debit component and then calculate the equity option value.
That's right. And finally, how to compute the equity component and the financial liability component. That's the question. So we have to work on what? In case we have a compound instrument.
Present value.
Thank you so much. So I have to, from the compound instruments, of course, at the initial recognition. So you have to divide this into financial liability and equity instrument. Okay, the question is how to differentiate between the financial liability and the equity instrument. All right, let's go back. I think that we have to work on the calculation of the present value, like you said, Zakaria. So the present value, it's the one that you're going to use to compute the financial liability, the present value. And of course, the balance, or let's say the difference, it should be recorded on the equity section, right? This is how can we deal with it. All right, for the financial liability, you have to compute the present value. Okay. 3. Okay, we have to compute that from October 1st to any X3, the redemption is expected to be on the 13th of September 2026. So we're going to count 4, 5, and 6. I think 3 years, not 4. 20x3, 20x4. Okay, let's say 20x4 because 3 is October, so finally approximately, you know, say the 20x4, 20x5, and 20x6. These are 3 years. Okay, the first one is related to, or the first column is related to the cash flow. The second column is the discount factor, the present value factor. And finally, this is the discounted cash flow. Okay, first of all, do you have any cash flows expected to be from this note? Think about the cash.
Yes,
Yes, what is it?
the interest that will be paid on a yearly basis, and at the end, at the maturity, we will pay the interest plus the maturity value.
That's right. So the maturity value is the last interest plus the principal that is going to be redeemed. All right, so based on what? Based on the 5% nominal rate or the coupon rate, right? So 5% times 10 million. 5% times 10 million, I'm thinking about, of course, 500. On 20x5, it's again another 500. But at the maturity, which is September 30th, 20x6, we're going to redeem 10,500. Is the principal plus the last coupon interest. So the present value factor that you're going to use, of course, is related not to the 5%, the nominal rate, but it's for the effective rate. I said that the 8% similar loan note without the conversion option. So is expected to be 8%. So you have to put the 8% present value factors. So 0.93.
0.86.
0.86.
And 0.79.
And 0.79. All right. And then we do the count. 500 times 0.93. So 465.
Then 430.
430.
And 8,295.
8,295, and then we do compute the total of the, or the sum of the discounted cash flows.
9,190.
9,190, excellent. So this is the sum, and of course we know that the redemption should be for 10,000. So the balance or the difference between 10,000 and 9,190 should be representing the equity component.
810.
Okay. So this is the financial liability component, and this is the equity component. So finally, this is how can we get it, okay? Because this is at initial recognition on October 1st, 20x3. So we divide this into financial liability and equity component. So normally the journal entry, in case the journal entry you're asked on, you debit cash for 10 million and you credit the financial liability for 9,190 and you credit equity for 810. Okay, this is the initial recognition. Okay, nice. So the question, I think that the question is already answered. So what is the correct one? Equity 810, non-current liabilities 9,190. It's obviously A. So for the rest, of course, it's not possible to have them. Can I ask a different question using the same data? Because the question is asked based on what is provided just on the 1st of October 2023 or the initial recognition. All right, just in case, I'm asking another question now. Think about it. The carrying amount. Okay, another question. This is question, okay, let's say question 2. What is the carrying amount? At September 30th, 20x5. The carrying amount of the liability, to be precise. So of course you have the initial recognition of the financial liability, which is 9,190. But now the question will be, what is the carrying amount at September 30, 20x5? I mean, 2 years later. What shall I do?
Amortization table.
That's right. You're going to be doing the amortization table. And you go for the beginning balance. Okay, let's say this is 20x4, 20x5. Of course, you need just the 20x5, the ending balance. We can stop there. And finally, you continue working on the finance costs, the coupon rate or the coupon in general. So the ending balance. Okay, the beginning balance is obviously the one that we start with, 9,190. Okay, the finance cost is based on the effective interest rate. And the effective interest rate is 8%. 9,190 times 8%, 736. Coupon is 500. And for the ending balance is 9,190 plus 736 minus 500. It's 9,426. So this is the ending balance that you start with, the beginning balance 20x5, so 9,426 times 8%, 755. So 9,426 plus 755 minus 500. This is the ending balance, 9,681. So this is normally the answer to the question, the carrying amount. Okay, some additionally to this question, I can ask you about what are the necessary journal entries to consider in 20x5. Okay, the question now is the journal entries.
Monsieur, كيفاش الكوبون خمسمية؟ عملنا الأغراضي.
I'm sorry? The coupon, how it is computed to be 500?
Yes.
Okay, so what do you have? You have a loan, right? And the
Yes.
coupon rate is based on what? Based on the par value or the face value. The face value is 10 million. Okay, so
Yes.
that's what 10 million times
Yes.
5%.
Yes.
Make sense?
Yes.
Yeah. Okay, go back to the question. The journal entries in 20x5. Okay, what do we have to record in terms of journal entries? You have the table in front of you.
We debit interest expense and credit financial liabilities for 700 and
excellent. So you debit interest expense. Okay, the you say that statement of profit or loss for 755. Okay, think about 20x5, so 755. And you credit?
Financial liability.
Absolutely right. For 755. Okay. And then
We debit financial liability and credit cash for 500.
that's right, you debit financial liability. Liability for 500 and you credit cash for 500. That is nice. And of course, guys, without any difficulties, just remember when we're using the T accounts, of course, remember that for the financial liability, if you have the ending balance or the beginning balance that you start with, which is 9,426, of course, if you're going to add to the financial liability 755 and you subtract this 500, of course, you're going to get finally the same ending balance that we were asked about, which is 9,681. All right, that's nice. Okay, if you have any question, please let me know before that we move to the last question, the question 4 on this part 1. Okay, if no questions, so let's go to question 4. Melia enters into a factoring arrangements for a receivable balance of 15 million. The agreement states that Melia will receive cash from the factory equals to the 90% of the value of the receivable. The remaining 10% minus any administrative or an administrative fee will be received when the customer settles the balance. If the receivable remains unpaid after 6 months, Melia will have to return the cash advance and pay the administration fee. Okay? Which of the following statement is correct in respect to the above agreement? Melia should not recognize any administration fee until is it paid. Melia has transferred the control of the receivables balance as soon as the cash is received from the factory. And finally, the initial double, I'll say that, not the finally, the initial double entry to record the transaction would be debit cash, credit liability, and finally, an initial expense of 1.5 million would be recognized.
The third
Okay,
option
guys?
is the correct one.
The third option.
Mhm.
Okay, so you eliminate, for example, the first one. What's wrong in the first one, honestly?
It says
Yes.
that it should not recognize them until it is paid, but it's not until it is paid, until the until it can officially transfer الرايتس نتاعها.
هو حتى كما صار transfer of the rights لازمني نخلص لهم الفيز هذوما الادمنستريشن fees because the terms يقول لك راهو the remaining 10. Okay, so let's take everything. So how much is the account receivable here? 15 million, right? This is the balance of accounts receivable. How much we get immediately from the factor? The cash.
13.5 million.
Yes, it's going to be 90%. 15 million times 90%. So it's 13.5 million. Excellent. And what about the 10%? the remaining 10%. يقول لك these are
Administration
not
cost.
commission. لا مش كله. So finally 10% normally should be given to million. أما وقتاش are given to million? This is deferred in the time. So it's going to be given when the factor.
After 6 months.
No, just before that, we say that one. Okay, let's read the 10 sentence one more time. The remaining 10% will be received by who?
Miliaco.
Tahid, thank you. So normally when, so the 10% remaining should be received by Miliaco when the 100% of the receivable will be paid. راهو هنا okay 10% باش تاخذهم مالكو اما راهو there should be another okay and this is a subtraction هنا we have to be careful ثم administration fees. So when exactly the administration fees, which is finally it's an expense, right? It's an expense. When we record an expense is recorded when it is incurred. Okay معناتها normally وقتاش الاكسبنس هذوما are to be recorded عندنا two options H1 و H2 hypothesis 1 hypothesis 2 in all cases they're going to be recorded in all cases but I'm asking about the timing. In H1 the administration fees are recorded نحكيو the scenario on which the collection is on time. What is the time of collection? What is the time of collection? Honestly, this is on time because we recorded when the factor is receiving the money from the customers to Melia on time. We say that the collection on time at that date, particularly, we record the administration fees. The H2 is what? No collection on time. And نمشي أكثر. Okay, and no collection at all. At all. So are they going to be recorded, these administration fees?
No.
Yes.
نقرأ الجملة هذه اللي بعد. If the receivable remains unpaid after 6 months, Miliaco will have to return the cash advance. I'm talking about the 90% اللي خديتهم and pay the administration fee. I can say that no collection at all. It means that after 6 months, وقتها you record the administration fees. So if you go back to the question, يقول لي راهو Miliaco should not recognize any administration fee until is it paid. It's not related to any payment. Okay, تجب تكون فما administration fees even though there is no collection of the receivable, and this is the case. Am I clear?
Sir,
Yes?
could you please repeat the last part of the after the 6 months because I didn't really get it.
You say the H2, the hypothesis 2?
Yes. So
Okay, for the
I
hypothesis.
assume that after 6 months, if it's not paid, Miliaco, I think, will return the whole amount.
Not the whole amount, the 13.5 million. We return the 13.5 million. خاطر Miliaco received only 13.5. وثم condition to receive 10% الأخرين اللي هي وقتاش when the customer settles the balance الكل. معناتها وقتها الكاستمر of Melia will pay the 15 million to the factor. وقت الفاكتور يقول لك اوكي كمان يجي خذ ال 1.5 مليون نتاعك واعطيني الادمنستريشن فيز.
It's clearer.
فالكونترا هذا هو معناتها this is the contract. معناتها الفاكتور باش يضمن حقه، خاطر أغزل شنو مشكلته الفاكتور؟ الفاكتور يقول لك يا خويا ما قلقنيش الخلاص ولا مش الخلاص، المهم إذا ما خلصتش راني خلصني في فلوسي. So ذاك علاش يشد عليه 10%. يقول لك راهو this one will not be paid until we receive the full amount or the balance due. So if we receive the balance due, I give you the 10%. مش I give you 10%. In reality, نعطيك 10% minus administration fees. This is what shall we do in practice. So the problem of the first statement is that Meliaku should not recognize any administration fee until it's paid. So it's not correct. But even though there is no collection and there is no payment, the administration fees should be assumed and of course should be recorded. لازمك تعطيهم فلوس in all cases. The second one, Meliaku has transferred control of the receivable balance as soon as the cash is received from the factor. يعني وقت اللي خدنا 90% of the receivable وقت اللي factor the receivable يقول لك راهو the control of the receivable is transferred. All the risks and rewards of the receivable are transferred to the factor. Is this sentence correct? Is there any transfer of risks and rewards to the factor on the receivables?
Oh, no.
Obviously no. And the proof and the evidence هي الجملة هذه. If the receivable remains unpaid after 6 months, the company Melia will have to return the cash balance and pay the administration fees. Now, this is the sentence confirming that the risks and rewards of the account receivable are not transferred to the factor. So ما نجمش نقول on the recognition، ما نجمش نحط on the credit side account receivable. ناخذ الإكزامبل هنا from accounting. Okay. Normally وقت اللي يصير الفاكتورينج Meliaku will record a reception of cash. So we did cash for 13.5 million. And what are you going to credit? إذا ثم transfer of risks on rewards. So تعال تحط credit accounts receivable. ركزوا معايا شوية يا جماعة. In case we do have a transfer of the risks on and rewards. يعني مستحيل in the contract تلقى any article يقول لك راهو in case the balance is not going to be paid in the future, I will get back to you to pay me. And the responsibility of the collection will be transferred 100% to the factor. In case the transfer is done, so عندك الحق تحط credit accounts receivable. But in that case, we don't have the transfer of risks and rewards. What shall we record instead of credited accounts receivable? إذا تفكروا حكاية the substance over the form. The substance, the principle of the substance. Yes, over the form. معناتها transaction هنا بويسكو ما فيها transfer of risks and rewards, we consider this as financial liability. عبارة بسلفوك فلوس. يعني الفactor is acting as a bank. Why? Because finally the bank or the factor in that case is not assuming any problems or any risks on the account receivable. So you cannot settle the account receivable because the account receivable will settle when there should be a payment. So we have to debit this one. هذيك علاش the initial double entry to record the transaction would be debit cash credit financial liability. Yes, it's correct 100%. It's on factor. باش ناخذ هنا يعني خلينا نمشيو just to understand the figure more. Okay, think about the hypothesis one. The hypothesis one is if paid. Talking about the 10% الأخرين اللي ما زالوا. Okay, finally the factor received everything, the balance from the customer. So everything is paid. What shall I record in the future? when the factor will receive. Okay, let me write in this clearly. If the 100% of the receivable will be collected by the factor, what is the journal entry to record? What is the journal entry? مش عند الفactor. The journal entry million.
A debit financial liability.
That's right. You
And
settle
debit
the financial
cash.
liability. Okay, let's go step by step. Debit financial liability. I totally agree. For which amount?
30,500,000.
That's right.
And debit cash في 10% محل minus.
Okay, you debit cash for the 10% that are not yet collected, the remaining 10%, yes.
And we credit accounts receivable وزاد expense هيك.
من نزيد نعمل ديبت أخرى للادمنستريشن fee.
Yeah.
For the amount اللي هو ما عطاناش حتى indication 1%, 1.5%, I don't know, just I'm putting the structure of the journal and I credit
The accounts receivable.
absolutely. You guys, I need just 30 seconds, please. Yes, that's right. Excellent. So the second hypothesis is if a percentage of the account receivable or all of the account receivable or 100% of the account receivable are not collected by the factor. What is the journal entry where you should record? So in the future, in other words, past the 6 months, عدينا 6 months and nothing received or a part of the receivable is not collected. What shall we do in terms of journal entry? بنقول 100% is not collected. Take it easy. What is the journal entry? Of course, in the Melia books. So the contract is يقول لك in case after 6 months nothing has been paid by the customer to the factor, Mediaco will have to return the cash advance. I'm talking about the 13.5 million and pay the administration fee.
So it will debit, financial liability and debit the administration fee and the credit cash.
That's right. So debit the financial liability, debit the administration fees, and finally you credit cash. This is for 13.5 million. This is for an in now amount, and of course the cash is for the sum. Is it okay, guys, for you?
Yes, this is clear.
Of course, guys, I'm seizing the question not to answer the question finally, because I would like to see of course, the effect of everything on all the possible scenarios on the journal entry, just in case a question will be on some of this. That was the part one. Okay, so if no questions, so we can move on to the second part, questions. Guys, just to let you know one more time that these questions that you have from part one and part two are taken from ACCA exams. Okay, so let's go to the first question on the part two. Rory owns the two financial asset investments in the shares of listed companies. So both investments, in other words, are equity investments. You invest in stocks. Details of which are as follows. Investment one. It has been acquired on the 1st of September 2015 at a cost of $50,000 for the purpose of trading. Its fair value at the year end is $60,000. Investment 2 acquired on the 1st of August 2015 at a cost of $25,000 to hold indefinitely. Its fair value at the year end is $20,000. And what are the amounts to appear in the financial statements for the year ended 30th of September 2015? SFP is the statement of financial position. SPL is the statement of profit or loss. And the SCI is the statement of comprehensive income. Okay, so it's a kind of exercise on which you have to classify the financial assets into, let's say, fair value through profit or loss, fair value through comprehensive income. Okay, for the first investment, how you classify this investment or the equity investment? Which method it's much more appropriate to classify the first investment?
Fair value through profit and loss.
Through
Yes,
profit and
and profit
for
and
trading.
loss. It's the purpose of trading, right? This
Yes.
keyword is important. Purpose of trading. Obviously, when you say the purpose is of trading, of course you are going to use the fair value through profit and loss, because any gain or a potential gain, let's say on a potential loss just on the fair value adjustments, we're going to go through a profit and loss. All right, what happened by the end of the first year? So that acquisition on the 1st of September at December 31st, or is the ending is the 30th of September. Okay, so the acquisition on September 1st, 2015. So 1 month later, so the fair value is 60,000. So if you're using the fair value through profit and loss, so you're going to increase your assets by 10,000. And also you have to increase your revenue in a form of gain for 10,000 to get the balance, right? So you increase the assets by 10,000, you increase the equity also by 10,000. Particularly, you go to the profit and loss. So plus 10,000 on the asset, plus 10,000 on the profit and loss. All right, which of the following statements is talking about 10,000 gains on the statement of profit and loss? You have two options.
Yes, the first and the last option.
The first or the last. So we eliminate from the beginning B and C. Investment 2 acquired on the 1st of August at a cost of 25 to hold indefinitely. These stocks, these shares are expected to be held indefinitely. We don't have any purpose of trading here. So the appropriate method is what?
Fair value,
Amortized cost.
Amortized cost?
fair value through comprehensive income.
Oh, yes, because the amortized cost, you see, is not possible to consider this because it's an equity. It's an equity instrument. An equity instruments, we're not amortizing it unless, and this is possible, of course, that we talk about some conversions. Okay, it's going to be converted later into something else. But in all cases, based on the data provided as is, we cannot think about amortized cost. So do not invent. So it's a fair value through comprehensive income. So what happened to the investment? So the acquisition has been on a cost of 25,000. So the fair value by the year end is 20,000. So the asset will decrease by
5,000.
5,000. And this 5,000 is going to be shown on what? On the statement of comprehensive income in a form of what? Loss. So you see the SCI, the first one is nil, so it's not possible to consider. So finally, the D, it is correct. Is the statement of profit loss and gain of 10,000. Statement of comprehensive income, a loss of 5,000. But on the statement of financial position, you see the two investment at fair value, 60,000 and 20,000. So this is 80,000. So the correct answer is D. Yes.
ما فهمتش معناها على خاطرهم shares دونك نغزروا just two ways نتاع fair value through profit and loss or through other comprehensive income. معناها amortized cost just شنو بالضبط البونز وكل كهو. فهمت علاش نحيناها amortized cost.
هو يمشي exactly in most of the cases. Yes, it is correct. يعني in all the words كان نرجع لهنا. Sorry. I'll go back to the lecture notes. نرجع شوية نركزوا في classification or the criteria and how to classify this. شفت هنا fair value through profit and loss ما فيش مشكلة, is okay, is clear. All right, fair value through comprehensive income, other comprehensive income, the financial asset are measured at fair value with the movements in fair value going through other comprehensive income, where the business intends to hold assets in order to collect contractual cash flows and to sell them. Okay, this is what? This is one of the criteria. And the contractual terms of the financial assets give price on specified date to cash flow that are solely payments of principal and interest, meaning that the asset is a debt instrument, not equity share. But in case we're talking about an equity investment, فما يكونش عندنا any cash flows coming from. يقول لك hold indefinitely, it means what? You're going to get dividends in case the dividends are going to be distributed. Okay? ما تنجمش تحط amortized cost in a very simple way. And with amortized cost, the business intends to hold the asset in order to collect contractual cash flows as opposed to selling the assets. Okay. The contractual cash flows هذوما does not exist في الحالة متاعنا على خاطر عاملة dividends. والdividends هذوما are ordinary dividends, are not, for example, preferred dividends. مثلا. So business model test is not possible to have it on stocks. ما يجيش على ordinary stocks انك تجي تقول it do exist these contractual cash flows. يقول لك that the contractual terms of the financial assets give rise on specified date to cash flows that are solely payments and the principal and interest. We don't have any principal and interest, right? ونبقى نروح هنا في equity investment. تقريبا هنا every time you talk about stocks ما تنجمش تخمم في الامورتايز كوست. صعيب ياسر. اللهم يبدا compound instrument. فهمت شو حابب تقول؟ وقتها تنجم تلقى الامورتايز كوست وتلقى فيه فيجر اخرى بتاع ايكوتي. Make sense?
Yes, thank you.
معناها مش شو الامورتايزد كوست كان في البوند نستعملوها.
هذا هو المنطق. خاطر الامورتايز كوست ما ينجم يكون كان على معناتها اللايبيلتي، ما تنجمش تكون على الستوكس. اللهم قلت لك الستوكس يوليو عندهم mixture معناتها ينجم يكون ستوكس ما فيهم conversions وقت نجم نلقاو liability part نتاعها.
Okay, thank you.
So in this equation يقول لك two financial asset investments in the أكد لك عليه in the shares of listed companies. هذوما stocks هذوما shares. So finally ما نجمش يكون يمشي مع amortized cost. Amortized cost ينجم وقت اللي يكون فما something that you have of course to pay back, okay, as an investor معناتها. Okay, let's go to the second question. Bobby bought 100,000 shares in the listed company on the 1st of May 2018 for 420,000, including transaction cost of $10,000. The shares were not acquired for the purpose of trading, but to realize the gains in the future. On the 13th of June 2018, the reporting date, the fair value of a share was $5.10. What are the amounts to appear in the financial statements for the year ended June 30, 2018? June 30, 2018, this is the end of the period. Remember, the acquisition has been on May 1st for 420,000. Okay, which perspective are we tackling in this question two? Are we tackling the perspective of investor or the perspective of the issuer?
Sir, screen بتاعك مازلت في question 1.
Oh. Hey guys, you confirm that you have a problem on my screen?
Yes.
Yes.
Okay. It's blocked. Okay, whenever if the question two is appearing to you guys, please let me know. Is it okay or not yet?
No, sir. مازلت blocked. For me, at least.
حطينا.
It's the same. It's a black screen.
Okay. So maybe I have to switch to 4G. So guys, I will disappear for 30 seconds.
Okay.
And for now, guys.
Yes, it
sir.
works.
Yes, it works.
All right, nice. So getting back to the question 2, Bobby bought 100,000 shares in the listed company of the 1st of May 2018 for 420,000 and current transaction cost of $10,000. The shares were not acquired for the purpose of trading. Were not acquired for the purpose of trading, but to realize the gains in the future. But I don't know when in the future. So it's hold indefinitely till now. On the 13th of June 2018 reporting date, the fair value of the share was $5.10. What are the amounts to appear in the financial statements for the year ended 30th of June 2018? First of all, we're taking the perspective of the investor or the perspective of the issuer.
Investor?
Yeah, that's right. Say the company bought 100,000. So we're taking the perspective of the investor. So it's a financial asset, not financial liability, right?
Yes.
Okay, what is the initial recognition? Let's say that the first time we acquired, let's say as an investor, this financial asset, how it is recorded? Of course, you're going to debit the financial asset and you credit normally cash. Okay, now for which amount? I said the initial recognition. Yeah. Yes, Rami.
It's for 430,000.
That's right. It's 430,000. We have the cost, which is 420,000, and any transaction cost, incurring transaction cost of $10,000. So you add this to the financial asset, right?
Yes.
So it's going to be 430,000. So from the perspective of the investor, any financial cost, or let's say acquisition cost, should be recorded with the investment. So 430,000, the initial recognition or the initial measurement. So the question there is asking about the carrying amounts or how these amounts are appearing on the financial statements. On the 30th of June, how it's going to appear. First of all, we have to classify this investment. كالعادة, amortized cost, fair value through profit or loss, or fair value through comprehensive income. Which one is going to be the method? Based on what you have.
Other comprehensive income.
Yes.
Have to realize gain in future.
Fair value through income. That's right. And of course, we 100% eliminate the fair value through profit and loss because we have is not acquired for the purpose of trading. So it's totally eliminated. So when you see SPL, statement of profit and loss, nil, of course, it's not going to be correct. But the only thing that you have to consider is that at reporting date or by the end of the period, the 30th of June, what should be the value or the fair value? Okay, the fair value of June 30th equals to, it's 100,000 shares, like times 5.1. This is what the 5.1 is, $5.10. This is the fair value, okay, of the shares at June 30th. It's 510,000. So normally this is what the fair value. If you're using the fair value, so this is the carrying amount that should be appearing on the statement of financial position. In other words, in addition to the 430,000, we're going to add 80,000 in the asset. This is to arrive at what? To arrive at the carrying amount, which is 510,000. So on the statement of financial position, I'm now certain that it's going to be 510,000. And because SPL is nil, of course, the only one that is correct is this A. And obviously, guys, the movement, and this is what we're talking about. So every time you increase your assets, you have to increase on the other side of the equation equity. And on the equity, you have to be careful. It's not we have the profit or loss, we have the comprehensive income. So which one is going to use? Of course, the comprehensive income plus 80,000. So the correct answer normally is A, with no any doubts. Make sense?
Yes.
Nice.
Professor, correct answer is what?
Is C.
Yes. How is C?
The first one.
The first one. Okay. خلينا نحط قدامنا حاجة basic as usual. Assets equal liabilities plus equity. The method that we are using is إذا باش نقول retained earnings incorporating the profit and loss, right? And this is the accumulated other comprehensive income elements, right? The initial measurement مش عملنا the financial assets عملنا plus 430,000 cash minus 430,000 then initial.
Yes.
At the reporting date احنا we have to use the fair value هكا ولا the fair value يقول لك 510. So what shall I do? يقول لك you have to increase your asset by 80,000. Why? Because you would like to get a new balance of 510,000. Okay, and if you increase your asset by 80,000 in using the fair value through comprehensive income, so you're going to increase your comprehensive income by
Yes.
80,000.
أي سر يعني مش في statement of profit and loss في statement of comprehensive income.
That's right.
Realized gain وهي مكتوب statement of profit and loss يعني لولا.
Oh yes, I'm sorry.
ماشي.
You're totally right. You're totally right. So it's not A.
It's
Obvious is D that is correct. I'm sorry. I looked at it as a statement of comprehensive income. Of course, SPL is 0.
C. No.
It's C.
بعد
Yes, you're
valuation
right.
خدت عليها.
That's totally correct. Yes, I'm sorry for that. And you're totally right. I apologize for the error, guys. It's SFP 510, SPL 80,000 is not correct. Listen, can حطها correct and حط SCI مثلا statement of comprehensive income. Just the only one that should be correct. But in that case, the A is not correct, the B is not correct, and the C is correct.
Okay, thank you, sir.
You're welcome, and thank you for just reminding me that the SPL is written, not the SCI. Okay. Sometimes we can make errors that are so stupid, right, guys? And this is the case with the exams. Sometimes we can get 100 if we are 100% concentrated. Losing concentration for seconds, it costs you a lot. It costs you, for example, an A to an A minus. How difficult is your life, guys?
So difficult.
Yeah. I'm really happy to be just a professor. I'm not, let's say, beating for a GPA. Okay, guys. I think that we have to take a quick break, maybe 10 to 15 minutes break, and we get back to the rest, of course, of the questions. We still have 2 questions in the part 2 that we have to finish. And of course, I'm planning to start this chapter 3, but I'll not be taking that much time. We're gonna be finishing at 11:30 maybe. So what do you think about 10 minutes break is okay with you?
Yes.
Yes.
Okay,
Sir,
guys.
just one thing. Can I leave at 11 على خاطر نقراو Java 11:30 في TBS, so I have to go from home to TBS.
Oh, so you have to leave a bit earlier. Okay, of course, no problem. So thank you for, okay, I was thinking that you're free. Okay, no problems. You can leave. But okay, so to be fair with everyone, ناخذوا break of 10 minutes ونكملوا ل 11 ل 11 ودرجة. Is okay?
Okay. Thank you, sir.
Okay, sorry, I was thinking that you're free. Thank you. Okay, guys, shall we get back?
Yes, sir.
All right, thank you, Zakaria. But 10 minutes ما زالوا شوية هما.
I didn't count actually. If
I know,
everyone is
just,
here, we can start.
but if everyone is ready, so we can go. Okay, guys, let's go to the third question. On the 1st of January 2017, Andy issued 100,000 3% debentures at 3% discount on the par value of $100. The debentures are redeemable at a premium of 5% in 3 years' time. The effective rate of interest on the debenture is 5.71%. Question is, calculate the finance cost to be shown in the statement of profit or loss for the year ended the 31st of December 2017. It means 1 year after the issuance of the debentures. Okay. So which perspective are we taking in this question? Are we taking the perspective of the issuer or the perspective of the investor?
He's an issuer.
Issuer.
Is the issuer perspective, so it's going to be the financial liability perspective, right?
Yes.
Nice. So calculate the finance cost to be shown in the statement of profit or loss. So we're going to use that table that you remember, right? The amortization table. All right. For the beginning balance, what do you have in 2017? The beginning balance. In other words, what is the, let's say, the initial recognition and how we record the initial recognition? So of course, from the issuer perspective, you debit cash and you credit financial liability. For which amount? The issuance is being at what? At 3% discount. 3% discount. It means at 97% of the par value of the stock. Par value of, sorry, the bonds. So how many bonds do we have?
100 multiplied by 10 multiplied by 79%, 97%.
97%. So say that 100 times 97%. Am I correct in this? $100.
Yes.
Is $100? Yes. times 97%. So it's going to be 97,000, right? I can see the 97,000 is the beginning balance. So of course on the journal, you debit this for 97,000. I'm
مش
sure
9
it's
million
970, yeah.
9,700,000.
Yes, it should be this one. 9,700,000. Yes. So what you have is 9,700,000. Okay. The interest or the finance cost is the beginning balance times what? Is it 5% or 571? $553,870, right? This is how we compute it. Of course, this is the answer finally to the question, but of course, you know, guys, how we deal with this. So just is equals to this one times 0.0571. The coupon interest is what? It's 10 million. 10 million times 5%. And say 10 million times 5%. And the ending balance, just in case you're asked about it, so it's going to be plus minus. Okay, so normally, guys, what we're looking at is this one. Is the finance cost at the 31st of December 2017. 353,870. I don't think that is difficult. Let's move to the question 4. And the last question on the part 2. They said that Trent issued a 5 million 4% convertible bond on the 1st of January 2017 at par. The bond is redeemable at par on the 31st of December 2020. So we're counting 4 years here, or can be converted at the date to one ordinary share for every $100 of bonds held. The market rate of interest on similar debt without a conversion option is 6%. And you have also the present value of $1 receivable at the end of each year using the discount rates of 4%, 6% are as follows. So again, it's a compound instrument on which we talk about convertible bonds. So at initial recognition, it's similar to the question that we saw in part 1, honestly. You have to divide this into equity part and liability part. So the question is on what? Calculate the value to be credited to equity on the 1st of January 2017. For the compound instruments, you always debit cash and you credit the financial liability and you credit equity. What you're looking at is this one, is the equity part. And you know, in order to compute the equity part, you have to work on what? On the liability. And you have to compute the present value of the financial liability. Okay, and the present value, as you know, you have to compute the future cash flows, and you have the discount factor, and you have the discounted cash flows. So how many years do we have? We have 2017, if I'm not mistaken. This is the first, and we count 4 years. 2017, 2018, 2019, and 2020. For the future cash flows, let's have a look on the future cash flows. What do we have in the future cash flows? We have the interest. Okay, now how much is the interest? 5 million, 4%.
200.
It's 200,000. So it's going to be 200,000, 200,000, another 200,000, and for the last year is going to be the principal plus the last coupon. It's going to be 5,200,000. The discount factor. Be careful, use the 6% because this is the market rate of interest on similar debt without the conversion option. So you have to work on the 6% discount factor. 0.94, 0.89, 0.84, and yes, and 0.79. So the discount fact, of course, the discounted cash flows are
188.
okay. Thank you for just helping me on that. 188,000.
178.
Nice.
168.
Yes.
4,108.
4,108. Okay, as usual, we do the sum.
4,682.
600.
42.
Yes.
Equity 358.
Absolutely right. So the equity is all about the balance, 358,000, and it's going to be, of course, the sum of all of this. It's 5 million. And the equity is simply this 358. So normally, guys, calculate the value to be credited to equity on the 1st of January 2017. So you have 358. So the correct answer is this one. The 4,642,000 is the calculate the value to be credited to financial liability. Okay, so this one, the B should be, of course, in case we change the question. Okay, makes sense, guys?
Yes.
Okay, these are, let's say, the possible questions that you may face on this topic, financial instruments. Okay, guys, so I'm going to start without wasting the time. I'm going to start this next topic. The topic 3 is on what we call contingent provisions and events after the reporting date. Provisions and events after the reporting date. We're going to discover, by the way, elements like what we mean by provision. But also we're going to discover what we mean by also contingent liability. What's a contingent asset? Okay, so remember, the terms are so important. Say that provisions, contingent asset, contingent liability, etc. But first thing first, we're going to discover the meaning of provision. And because the title is events after the reporting date, I said event after the reporting date, it's somehow confusing. I will let you know why it's a bit confusing. Events after the reporting date. So normally after the reporting date, we should do nothing. Normally, I say normally, but not all of the cases. Okay, I need this mapping to be clear in your mind. This is the timeline. Okay. This is not a timeline. Okay. This is, as an example, January 1st, 2020. Makes sense? So normally the reporting date for this year is December 31st, 2020, right? This is the reporting date. So what do you mean by events occurring after the reporting date? I'm talking about this period. Normally, guys, the events that are after the reporting date normally should not be taken into account. But I will take few examples to introduce how the standard is important. By the way, guys, I'm talking about a standard that we never covered before, is the International Accounting Standard 10. Okay, it's talking about these issues. All right, I give you an example, and of course, we're going to discuss how we treat it. Normally, guys, at December 31st, when we have to prepare financial statements, some of the things that we need to do is called the adjustment, right? Okay, before that we go for the financial statements, we need to adjust some accounts. Super fast, guys, give me an example of an adjustment that we have to do at the reporting date. Prior to preparing financial statements, one of the adjustments that you remember from financial accounting and intermediate accounting, obviously. Guys, where are you? Are you here? Do you hear me?
Yes, sir.
يا جماعة, I feel like I'm talking to myself. I don't know why.
Hi, sir. Yes, we can hear you now.
Okay, nice. So I'm talking about a period, let's say December 31st, prior to prepare financial statements. You know, guys, that in practice, we do have a lot of or too many adjustments. Too many adjustments. Just give me one of the adjustments that we need to make prior to prepare financial statements. Okay, I'll give you a hint. Think about accounts receivable.
Accrued revenues.
Yeah,
You get
but
it.
for account receivable, what shall we, how can we present the account receivable at the statement of financial position? How it's presented? The concept is what? Net realizable value or cash realizable value? We call it the carrying amount, right? The carrying amount or the cash realizable value. Okay, what is it? Is account receivable minus what? Allowance.
Allowance.
Thank you. For doubtful account. Sometimes we can call it, and thank you so much, we can call it provision for doubtful account. Provision for doubtful account. What is it? What is this in general? An amount that you can see in this section is what? So it's an estimation. Okay, of what? Of uncollectible receivables. At the reporting date, at December 31st, الكمباني هذه اللي هي you're dealing with, which is a customer, okay? تقول لك when we check in the financial situation of that company, we found that the this financial situation of that company, it's so difficult and it's most probable that the company will be liquidated. ايش معناتها؟ معناتها إذا كان عندي receivables, and of course that every single receivable with this customer now you have to do, let's say, what we call where you have to compute an allowance for doubtful account. So maybe 100% because you are certain or approximately certain, say that 80% of chance that this customer will be liquidated. مش يفلس. So the collectability of the receivable is approximately going to 0%. Okay? باش عملت حطيت allowance for doubtful account. عندك receivable as an example of 100,000 مع all the customers. عندك customer برك اللي هو you're not certain to collect but you are approximately certain that you are not collected. Let's say 10,000. So how the account receivable will figure on the statement of financial position is at 90,000. The problem is that you have to go for the journal and you have to make some adjustments. How? You debit an expense, which is called the bad debt expense. Am I clear? And you credit what? Allowance for doubtful accounts. But you put the 10,000, 10,000. Make sense? And you prepare financial statements. What is the financial statements are being issued? When exactly the financial statements are issued? You know what does mean by issued? Are presented.
End of March.
For example, in some of the cases in Tunisia, you know, for the Société Responsabilité Limitée, it's 25th of March. Okay, and for the corporations is by the end of June approximately, right? Let's take an example which is very simplistic. The issuance, let's say the issuance date. The issuance date. And we issue the financial statements. Okay. Now, when you prepare the financial statements, there are two other periods that are created. There period هذه and this period. I will inject another piece of information now. بعد ما حكينا على allowance for doubtful account. قلنا one of the customers is not going to pay us because we are approximately certain that this customer will be liquidated. ما عندوش فلوس and is going to be liquidated. Imagine إنه issuance date هذه June 30th. On May 1st جاتك information إنه الكاستمر هذا get an agreement with the bank to contract a loan, and this loan will be serving the company to survive. معناتها كنت وقت اللي عملت adjustment at December 31st, you were thinking that the customer is going to be liquidated. Now, smart, you get an information that the customer is contracting a loan, will get an agreement to contract a loan from a bank, and this loan will be serving the company to survive. ما عادش ليه معنى تو الكلام هذا loss for doubtful account. So the probability to collect, it's higher and it's approximately 95% now, بنقول with a 5% of risk. So is it possible that you keep this debt or bad debt expense 10,000? If you heard about it before the issuance date, do you have the possibility to readjust? Yes. So شفت هنا, even though the information is getting to our knowledge after the reporting date, but prior to the issuance of the financial statement date, so can we adjust? Yes, we can adjust. Make sense? Guys, are you there?
معناها مسيو will adjust ديجا الادجستمنت اللي احنا عاملينه.
بالضبط. الادجستمنت اللي عملته اللي هو غلط، اللي هو تبناه على فكره اللي انت في جانفي ولا في فيفري قلت سي بون باش نعدي adjustment هكا because I'm approximately certain I will be losing this. كيف جات information on May 1st تقول لك راهو لا is getting an agreement with the bank انه باش ياخذ فلوس. So هنا it's going to be readjusted. How? يمشي تفسخهم كريمان معناتها it's no more considered to be a bad debt. A bad debt is not possible to consider that because the company is surviving now. مش حبيت نقول this is an event اللي هو وقتاش صار after the reporting date. After the reporting date. Some other events that are occurring after the reporting date اللي ما فيهمش readjustment. And of course, this is the aim of the International Accounting Standard number 10. Okay, نعطيكم one of them. إنه for example, إنه at December 31st ما نعملوا what we call a physical count of the inventory, right? Physical count of the inventory. At December 31st, we did the physical count. لقينا inventory بقيمة معينة, right? This is it. And we normally present the inventory with that value. وش صار بعد مثلا on May 1st ناخذ في نفس May 1st حريقة ضربت الwarehouse. So most of the inventory has been destroyed. Is this event occurring after the reporting date? Yes. But do we need to adjust the value of the inventory at December 31st? No. Why? Because that was the case at December 31st. So that was the inventory at December 31st. The event that is occurring after the reporting date is non-adjusting event. Non-adjusting event because you don't need to say that the inventory should be written off. Usually, when we present the inventory, بيكون عندنا inventory minus the write-off. What do you mean by write-off? In case the inventory is losing value. مش تبقى ب 100. In case, for example, is losing value because it's becoming obsolete or something like that, or regardless is the reason of the write-off. مش تعمل هيك. So you present it with 90. This is what? This is finally what we call the carrying amount of the inventory. If the inventory is destroyed because of that fire, so what happened? So normally you can tell me that, okay, prior to the issuance date, I can inform the user in the financial statements that the inventory is valued as 0. You cannot do that because at December 31st, it was correct when you present the inventory with that value. So even though the event is occurring after the reporting date, so we don't adjust and we don't make any adjustment to it. Okay, we keep it as is. So after the reporting date, we have two types of adjustments. We have two types of events, I'm sorry. Some events that we call them adjusting events. Some events اللي هم يقولون لهم non-adjusting events. Okay, so we have to understand in which case we talk about adjusted events and in which case we talk about non-adjusting events according to the International Accounting Standard number 10. Make sense? Okay, guys, so I think that, okay, I have to let you go because some of your classmates are studying and it's not honestly fair that I start working on the provision. And of course, we will go back to this part the next time we're going to meet on Friday, okay? So I would like to thank you so much for your attention, guys, and I wish you a nice day.
Thank you.
Thank you.